Right now, the gold market is at a critical crossroads. You can just feel it, right? Something massive is building up just under the surface, and in the next few minutes, we're going to decode exactly what's headed our way.
So if you've been keeping an eye on the market, you might just see weakness. Gold's down a bit, silver's down, everything feels kind of quiet. But what you're seeing isn't random noise, and it's definitely not the market losing steam. No, this isn't what it looks like. It's a setup, plain and simple.
I want you to picture a spring, a massive industrial spring, being wound tighter and tighter and tighter. It's just storing up this huge amount of energy. Well, that's exactly what's happening in the gold market right now. It is coiling, getting ready for a massive release.
And here's the thing, we know from history, periods like this, they don't just fizzle out. They don't just lead to some slow, boring drift. No, they lead to an explosion. A sudden, violent, decisive move. The silence you might be feeling in the market right now, well, that's what makes it dangerous. It's masking all that pressure that's building up.
And look, we're not talking about some tiny little blip on the chart here. When you get this much tension in the market, when these conditions align, we are looking at a potential 10, maybe even 20% swing. That's not just another day at the office, that's a major market event in the making.
So that's the million-dollar question, isn't it? All that stored energy, is it going to release in a massive rocket launch to the upside or a catastrophic flush to the downside? The answer? Well, it's all in the forces at play.
All right, so to figure out which way this thing is going to break, we have to play detective. We've got to look at the clues. And right now, there are these four massive forces basically in a tug of war with each other. And how they line up, well, that's going to decide everything.
Okay, so here they are. These are the four big pieces of the puzzle. What the Fed is going to do next, what the real story is with inflation, what's coming down the pipe with political policy, and of course, the direction of the good old US dollar. Let's break each one down.
All right, first up, the Fed. You got to think of the Federal Reserve as the center of gravity for gold. And the rule here is dead simple. If the Fed stays hawkish, keeping rates high to fight inflation, gold tends to bleed. But if they pivot, if they even hint that rate cuts are coming, gold doesn't just rally, it detonates.
And that brings us to this idea of real yields. This is kind of the hidden engine behind the whole thing. A lot of people just think, oh, inflation is high, so gold must go up. But, it's not that simple. Gold cares about real yields. So for example, if inflation is at 5%, but you can get 6% on a bond, your real return is positive. That makes bonds look way more attractive than gold. So what you really have to watch is if bond yields are climbing faster than inflation. Okay, driver number 3, political policy. Think about things like new tariffs, big spending bills, or major tax changes. All of that stuff creates uncertainty. And that kind of uncertainty, it's literally like throwing gasoline on the fire for gold. Gold loves it when investors get nervous and start looking for a safe haven.
And last but not least, we have the US dollar. The equation here is usually pretty straightforward. Gold and the dollar tend to move in opposite directions. So if the dollar starts to rally and break higher, you can expect a really sharp drop in gold. But if the dollar rolls over and weakens, gold won't just drift up. It could trigger what we call a violent short squeeze. It's explosive.
Okay, so we've got our 4 drivers. Now we can start to see how they could line up to give us 2 completely different and pretty dramatic outcomes. This is where it all comes together. This is the reveal.
So here are the 2 paths laid out for us. On one hand, you have scenario 1, the explosion. This happens if inflation cools off, the Fed starts signaling rate cuts, and the dollar weakens. The result? Gold smashes through its price ceiling, and you get this wave of FOMO buying. On the other hand, you have scenario 2, the flush. This is if inflation surprises us and starts heating up again, the Fed has to stay hawkish, and the dollar rallies. Gold would break its support level, triggering a wave of panic selling. But that flush could end up being the single biggest buying opportunity of the year.
So that's the big question, right? How do you actually prepare for this? And this quote right here, it says it all. See, retail investors, they tend to jump in when the headlines are screaming and the price is already taking off. But the smart money, the professional money, they make their big moves during these quiet periods, just like the one we're in right now. This is the positioning phase.
Which brings us to the investor's playbook. Instead of just reacting to the noise, you need a clear, calm strategy. You need to know exactly what signals to watch for. So let's build your personal checklist.
Okay, here it is. This is what you need to be watching. Don't get fixated on the price of gold itself. Watch these 4 triggers. What is the dollar index doing? Is it breaking up or down? What are real yields doing? Are they rising faster than inflation?
Listen very, very carefully to the language the Fed uses. And finally, keep an eye out for any big policy announcements. These are the tells. They're going to signal which scenario is about to play out.
Look, the big takeaway here is this. Gold isn't weak. It's waiting. It's just waiting for one of these triggers to get pulled. And when it happens, I promise you, it will not be gradual. It's not going to give you time to think. There won't be a second chance to get positioned.
So, the pieces are on the board. The forces are in motion, and that spring is coiling tighter with every single passing day. The breakout is coming. And really, the only question left is, will you be watching the right things, and will you be ready when it happens?